I like trading the euro against the US dollar. It's the world's largest single instrument market. The Bank for International Settlements tells us that the euro US dollar pair in each day on average turns over the equivalent of 1.6 trillion US dollars. You can't get a more liquid market than that. It trades 24 hours, and of particular interest to me is the fact that a lot of the action occurs during the European and US time zones, and sitting here in the Asian time zone, we often get the chance to assess the overnight action and make some pretty reasonable propositions for the coming sessions in Europe and the US. So it's a market that I prefer, but I've found it very difficult to trade over the last few months because for me it's been a least worst choice scenario. With a lot of problems in both Europe and the US, I've found it difficult to make a fundamental call on where this stock is going. Now, a lot of traders swear by charts only and won't take fundamental factors into consideration. And there are other traders who use only fundamentals and believe that charts are voodoo. Well, I'm not in either of those camps. What I look for is a number of signals all pointing in the same direction. And what I particularly like is when the charts are telling me the same things that the fundamentals are telling me. Over the weekend we had the Euro Summit. And in that time, the markets, in the lead up especially, were looking for a long-term solution to the two major threats facing the globe from the European situation. The two threats that have to be met are a stabilisation of bond markets and a cutting of the budget deficits of those countries that were running towards insolvency. And while on the weekend we saw steps towards cutting those budget deficits, the inability to agree on a mechanism to stabilise bond markets and, by the way, stimulate the US economy, the European economy by injecting funds into it while those budgets are cut, illustrates to me exactly the problems we've faced in Europe over the last 2 years. That is, that European politicians are not willing to take the bold and decisive decisions required to sort out the problems, and that they will continue the same strategy they've displayed over the last 2 years, waiting until the last moment, waiting until a crisis is emerging before then acting in timid and unconvincing ways to deal with the immediate problems while kicking them further down the road. I suggest, therefore, that the European situation is going to continue to deteriorate through the next 12 months. And it's interesting to note that the chart seems to be indicating the same sorts of things. Now, many of you who are technical traders would have taken this signal here back in October as a signal to short the euro against the US. At that time, as I say, I didn't think the picture around the US was as clear and didn't take the trade myself. But quite clearly, some traders have made some very good gains as the euro has deteriorated over that period down to the current levels. It's quite clear too from this action here and the congestion we see here that there was some reasonable profit taking on those shorts around the 134, 133 area, and that seemed to support the euro US dollar cross. But over the last couple of trading days, we've seen it fall below the bottom of that range and then drop below the recent low over here. And as you can see at the moment, the euro is sitting just above 130. And to my mind on this chart, with that breach of the recent support, is signalling a move into a new trading zone. Now, a lot of my colleagues laugh at my technical analysis skills. They're very advanced chartists and use very complex methodologies and indicators to come up with trade signals. My approach is much more simplistic, but that's because what I look for is something I can understand about a chart. And support and resistance levels for mine remain very important. And the reason for that is they represent price levels where investors and traders, the market as a whole, has made decisions. And when it looks as if there's been a turnaround on the decision, this buying here at 130, 150 or thereabouts is now no longer supporting, I think we've had a change in the way the overall market is thinking about euro US dollar in this case. So although we've already seen a very strong fall from above 142 down to the 130 level, this action for mine, combined with my reading of the European situation, indicates to me that this is moving into a new trading zone. And why do I highlight that? Well, let's go to the bigger picture to see why I think this is important. I've just changed from a daily to a weekly chart, and you can see that those same zones are highlighted here. But this break below that support level indicates to me that we're heading into a new trading zone. We'll get an important test where you see this blue arrow. That's about 128.70. And if the Euro US drops below that level, the indication is we're looking for 120. That's why this chart's important to me. When there's the ability to have a look at a 10 or more big figure move unfolding over days or weeks, it starts to get me very interested as a trader. Now, all traders are different, and depending on your views and the sorts of indicators you use, you might be viewing this differently. But if you agree with this overall thesis and you get a signal that fits your trading strategy to be short Euro US dollar, I'd suggest over the next few weeks at least, that's going to be the way to play this pair.